If you think all is well and the great banking crisis is over and this is the best time to invest in the stock market, then wait, you are standing probably at the wrong side. The major economic pain is yet to come and more than 50% money from the stock market will be wiped out completely. In such situation, two things may happen. Either you will be losing half of your life savings or you could triple it. It depends on which side of the crisis you will be. To know which side should be your favorable position, watch the full video till the end and subscribe the channel to encourage me, as it will be motivating for me to bring more such useful contents. Every time recession starts after a black swan event, and this time this black swan event will be the US debt ceiling that will be exhausted by 1st of June 2023. But how it is going to impact our daily life if either this debt ceiling is increased or not increased. But before that, let's understand what is the debt ceiling and why as an Indian and US investor you should understand it. First of all, debt ceiling is the maximum amount that the US government can borrow by issuing bonds to run the nation's sovereign expenditures. Right now, the debt ceiling is 31.5 trillion US dollar. Let's understand how big this amount is. Suppose one such box is carrying 1 billion US dollar worth of cash. That comes around 8,197 crore Indian rupees according to the present exchange rate. Now, if 1,000 such boxes are kept together, it will turn into 1 trillion US dollar. And if 31,500 such boxes are kept together, it will become the total US debt. Maintaining such huge debt is highly expensive job, as US government need to pay interest on its debt to the bond holders or the debt holders. And if it cannot be paid, then US will be defaulting on its debt, and the debt holders will start selling the dollar denominated bonds and buy other most valuable alternatives like gold, silver, Bitcoin, land or real estate, and the dollar will become worthless and lose its reserve currency status. And most shockingly, this situation is already going to take place in America, as US debt ceiling is already going to reach on 1st of June 2023. That means beyond this limit, US government and Federal Reserve cannot borrow to run all of its expenses and debt interests. Most of the analysts are predicting that the US debt ceiling will not be increased, but they are absolutely wrong. It has happened several times in the history of the United States, and not surprisingly, this time it will also happen. But even if the debt ceiling is increased, but the problem will remain the same. The US GDP is near about 24 trillion US dollar compared to its sovereign debt of 31.5 trillion US dollar. That is 124% of the US GDP, and the debt is used to run the income security programs like Social Security, healthcare programs, national defense, Medicare, and paying the debt interest to its debt holders, because US GDP and the US revenue is unable to fund its own expenditures. As per the latest data till 30th April 2023, US revenue collection is just around 2.69 trillion US dollar against its sovereign expenditures of 31.5 trillion US dollar, and the total GDP size of US is 24 trillion US dollar. And if such situation continues, then it is estimated that by the year 2050, US debt to GDP ratio will stand at 225% from its present ratio of 124%. But this massive debt will force America and US dollar to lose its reserve currency status, and US will be the next Japan, whose debt to GDP ratio is 263%. To stop this thing, either the GDP need to be increased or the expenditures need to be cut. First one seems to be impossible, as to tackle down the inflation, US Fed itself is and will be increasing the interest rates, and that will create the crash crunch situation in the US economy, and GDP growth will be slowing down. And if it is not done, then inflation will be increasing massively and the economy will collapse and bring the recession in the US. And if the debt ceiling is not increased and the second option is taken and sovereign expenditures are cut, and to boost the government revenue, taxes are increased, then US economy will enter into the most painful deflation. and it will be more painful than the recession. That means in both the occasions, recession is imminent. Moreover, I have also mentioned in my previous videos that if the US Fed or FDIC start bailing out all the regional banks, then this money will again be circulating in the US economy and will be increasing the inflation. And all the steps taken by the US Fed so far will be useless. So the moral of the story is, whatever step is taken by the US Congress on the debt ceiling, unless the US GDP is increased miraculously with a controlled inflation environment, recession cannot be avoided. Kindly subscribe the channel, and in my next video, I will be telling you how to save your hard-earned money from upcoming recession. Till then, bye bye.